Good morning, everyone. Welcome to the pre-market prep session here for June 12th, 2023. We got a new day, we got a new week on the horizon, and a ton of new opportunities available to us. I'm your host, Adam Holland, stock options expert market strategist, and fellow one percenter. I see everybody in here already wishing each other a good morning, throwing that one in there, signifying their intention to get 1% better by the end of this session. You want to make sure that you're doing that, whether you're watching live or via the replay. You want to set your intention for the day, set your intention for the week. That's really what the Deluxe session on Monday is about here. If we can get this focused on in for the pre-market prep session. I don't know why my camera just hates on me. My camera's got like a vanity filter. Whenever I'm looking at myself live streaming, it doesn't like it. And then when I switch off of the screen of myself, it does like it. It probably has something to do with like maybe the light that comes off of my face. But we'll roll with it. We'll push. We'll continue to go. I hope everybody had a great weekend. Throw a 3 in the chat if you had a great weekend. I had an amazing weekend myself. Got to spend a ton of time with family, with my girlfriend's family, with my family. Was able to do something really, really special for my mom yesterday. And, it's important to just recognize that although there are tough times in life, you got to just focus on controlling what you can control and, the acts of love that you can do for your loved ones and, everything that you can do in order to just, again, control what you can control. And we had a weekend of being able to do that. And I was just so happy to be a part. So amazing to honor my amazing mother, as well as, be able to hang out with some family. I was at 5 hours combined of dance recitals on Saturday. So that was quite the eventful Saturday. They're supporting my girlfriend's little sisters. They all did great. But yeah, definitely all danced out for the foreseeable future. And then Sunday yesterday was just an amazing day. Got to spend with family and friends and just, kind of corral around loved ones. So amazing. Hope you guys had a great weekend as well. And today we're here to dive into a new week. Last week we had basically nothing on the economic calendar. Well, somebody's got to pay the piper, right? You got to pay the piper eventually. And that is exactly what is going on this week. So there are plenty of economic events on the calendar this week to make up for the fact that we have had, kind of an absence of them. We've got CPI data, PPI data, the Fed, making an interest rate decision. We've got Jerome Powell speaking. We've got consumer confidence. So we've got a ton of stuff on deck this week. I also personally will not really be here Thursday, Friday. Wednesday, I might be. Thursday, Friday, I'm going to be busy. PNC and Howard University, the prestigious Howard University, are putting on a entrepreneurship conference for Blacks in Entrepreneurship. And I'll be speaking on a panel along with my family on Friday for that Blacks in Entrepreneurship. I'll be speaking on a panel for that, which is an amazing opportunity. And then on Thursday, we'll be vending Black wealth there. So we'll be, out there getting the brand out there. Again, we keep getting selected for these opportunities, and I'm super honored to be a part. Things are moving, things are shaking, things are growing. And I think that that's something that's a big part of trading options, right? And overall leveraging your money into more money is that it gives you the ability to do things like pursue your purpose, right? That's really what we are here, is purpose pursuers. A lot of people come here with, kind of the one goal to make money. But at the end of the day, you want to make money so that you can pursue purpose. I know plenty of wealthy people that are some of the most miserable, despondent people that I've ever met. I went to school with a lot of wealthy people. Like, I'm not talking like casually wealthy. I'm talking like very, very, very high, 1% private jet wealthy type of people. And there's still sadness. There's still lack of fulfillment. There is still turmoil, right? So money never solves problems. You want this money in order to give you the freedom to do things that make you feel good inside, make you feel like you're pushing the envelope, make you feel like you're not stagnant, right? That's what we're here to make money for. So, I'm excited for everything on the docket this week. But as a result of all of the economic things that are going on, all the pieces of data, plus how busy I'm going to be, I'm not going to be looking to push the envelope a lot this week. You'll notice overall that whenever you have huge weeks in the market, it can often be followed up by crusty weeks, right? So last week we had a huge week, right? Tesla paying nonstop. We had Nvidia paying us, SPY paid us. We have a number of different tickers that are paying us, Meta paying us big, Apple paying us. So when you have a number of tickers that pay, right, you need to let that money settle. You need to withdraw that money, and make sure that you pay yourself, because these weeks after the big weeks, I'm telling y'all, those are the weeks that blow up your account. So for everybody who's saying, hey, listen, I get it, Adam, you're telling me to pay myself, but I don't really want to pay myself. I want to grow. I'm telling you, your account can end up red from where it was last week coming in. If you started trading with $500 last week and now it's $2,000, you could end up with $300 to your name by the end of this week in that account. And I'm not lying. I'm not lying. I'm telling you from experience, right? So this is not going to be a week where you're looking to go hard. You're looking to go crazy with things. Play light. Make sure that you're aware that each and every day, likely this week, we have some piece of economic data that is coming out, right? And that is how you should attack the week. If you go into the week having no idea of what the week will present, the week will smack you in the face. So I'm telling you, this week, with tons of economic data on the docket, you need to make sure that you are playing things safe. Do not take all the money you made last week and throw it into plays this week. If you were in a coma last week and you didn't make any money, then you need to make sure you're not revenge trading in order to make that up this week. Don't say, oh man, I missed out on Tesla. I missed out on this. I missed out on that. I got to go twice as hard this week. You got to take what the market gives you, right? You've got to take what the market gives you. If you try to force it, it will teach you a lesson. So going into this week, you definitely want to be more reserved, right? Take what the market gives you. See profit, take profit. Do not expect there to be, a whole lot going on where it's like, oh, this is going to be easy movement or this or that. The market makers don't like when you make a lot of money in markets. They want to get that money back. It's just like the house in a casino. So make sure you're managing yourself this week, right? And again, you can take the advice or you can learn the hard way, but I'm here to give you that advice for a reason. I've had to go through this a number of times myself, and I always have to remind myself after a big week, come into this clean slate. What does the week have for you, and play according to that, because this is the type of week where you can get solid looks, right? You can get breakouts and they just don't hold, and there's data that comes out and yanks you back beneath breakouts. So take your profit, play light, keep it pushing, and then wait for a week where there's not as much going on, right? That was last week. So for all my people who are trying to figure out, oh, should I trade a lot? Should I not be trading a lot? We had no data last week. So we have nothing that's going to throw a wrench in the technicals that are going on. That's when you want to play heavy, right? A lot of times once we work up the courage to play heavy in markets, it's not the time to play heavy in markets. That's why it's important, again, to build up that confidence and make sure you're ready to execute when it is time to execute. Now, in terms of our top news here, we're going to go over the week ahead and then go over our Monday specific news. So a huge week is setting up on the macroeconomic front, with the Federal Reserve and the European Central Bank both scheduled to decide on interest rates and update on monetary policy amid persistent inflation. The consensus view is that the ECB will lift interest rates by a quarter point at the Federal Reserve, and the Federal Reserve will stand pat, basically not raise interest rates. The big meetings arrive with market optimism ramping up in the early part of June. The recent rally has seen 10 of the 11 sectors of the S&P 500 push higher. However, a surprise from the central bank or the nail-biting inducing CPI and PPI reports could cool off bullish sentiment once again. Seeking Alpha contributor ING Economic and Financial Analysis contended that the Fed will likely hold the benchmark rate steady, meaning they won't increase interest rates, only to, quote, leave the door open to further rate hikes if inflation does not slow. That sounds exactly like something the Fed would say. Hey, we're going to pause for now, but we don't know what we're going to do in the future. Happy trading, right? The market could react any number of ways to that. Remember, we're at, kind of a dicey monthly level. Things could turn around at any point. So you're not just, saying, oh, we made it above that level last week, right? We're out, we're in the clear. That's not necessarily the case. We've had plenty of times where, we peak above things, we push higher on the weekly, and then there's just one week that wipes it all out. So continue to, see profit, take profit. Do not think the market owes you 40, 50, 60, 70%, 100% profit. It doesn't, right? If you have good profit, take it, play light, push it. Anything above zero is a plus. Not going negative is a plus, right? All those things are important to keep in mind here this week. In terms of earnings, we've got a few companies, but of course, earnings season is slowing down. We've got Oracle today. And then other than that, really just the only other household name is going to be Adobe on Thursday, and then Kroger on Thursday, June 15th as well. Now, do we have anything else? CPI preview for some economic news here. The Consumer Price Index report will be closely watched with the shadow of inflation hanging over the market. Ooh. Economists forecast a 0.4% increase in core CPI for May to match the level from April. Core CPI is seen being 5.3% in May and a slight moderation from the 5.5% pace in April. Headline CPI, which includes food and energy prices, is seen being up 4.1% in May. Bank of America expects a soft 0.1% month-over-month increase for food prices, reflecting an increase in food away from home that should be partially offset by another decline in food at home. The firm anticipates May will mark the third consecutive decrease in food at home prices as costs associated with groceries such as commodity prices, transportation, and storage continue to ease. However, food away from home prices are tipped to continue to increase given high labor costs and still strong demand. Seeking Alpha analyst Damir Tokic noted that the disinflationary process in services and shelter has started, but from a very high level and at a very gradual clip. Quote, the return to 2% inflation target is likely without a deep recession with a significant increase in the unemployment rate, he warned. So overall, we see, just they talk about how we've got inflationary pressures that are lessening at a slower pace away from home, right? We've got groceries and things like that going down at a faster pace than eating out in restaurants. I'll be glad when, I forget what the term is called, shrinkflation for food. Be glad when that's over because it's pretty annoying whenever you go out nowadays. And if you notice too, a lot of restaurants will add hash to the menu, right? They'll add like, oh yes, come get, for brunch we have our lobster hash or our crab hash, and it's a bunch of potatoes and like 1.5 pieces of lobster or like a few atoms of crab meat. It's like restaurants change up their menu in order to fill you up with a lot of bread, potatoes, pasta, and then they pretty much try and add the least amount of valuable meat on there as possible. If it's like a high ticket meat, they'll put a lot less of it in there, and they'll add other things that make you think it's meat. That has nothing to do with stocks or anything. That's just a personal annoyance of mine. That I'll be glad when everything is up and there are no recession talks and the economy is booming, because then restaurants give you actual sizes and they give you the stuff that you pay for instead of us sitting there, pretending like there's lobster in that lobster roll and really it's just a lot of bread and onion, right? So moving on to our Monday specific news. Oh, and let's also check out the calendar for this week. We'll go ahead and check out the calendar so that everybody knows on what day, what's happening, et cetera, et cetera. So June 12th, Monday, nothing really today. Tomorrow, 8:30 a.m., we have core CPI. So we get inflation data tomorrow, CPI data on Tuesday. So this big piece of data is coming tomorrow. Then Wednesday, we get PPI, producer price index, more inflation data, but this time for producers, right? The people that are producing what we purchase. We also get a Fed decision on interest rate policy at 2 p.m., and we get Powell speaking at 2:30 p.m. So Wednesday is going to be an action-packed day, chocked full of events. You have no idea how the market will react to any of the information that it gets, right? It could go either way, whatever way. They could use this announcement as cover to do what they were already going to do, right? Big money oftentimes uses announcements and Fed days and this and that to do what they're already preparing to do. So be ready for that, right? You can attach any headline to the market reaction to what the Fed does. Literally any headline will work. Oh, Fed, the Fed stays put on interest rates, markets fly. Or the Fed stays put on interest rates, market was hoping for cut, markets tank. Or, it's just like no matter what happens, you can attach a headline to it. So there's all these different thought processes you could have, all these different hypotheses you could have. At the end of the day, I think big money is just going to use it as a cover to do whatever they want to do. So if that is, start the sell off that ends up taking us beneath that line in the sand for the monthly bear flag on SPY, they can do that, right? They just use this as a guise to do what they want to do as cover. So Wednesday, absolutely huge day. PPI data pre-market. So just make sure, again, if you're swinging anything, you know what you're doing, right? Or not even that you know what you're doing. You understand what is going on, right? In that if you swing it, data can come out and completely thrash your trade pretty much every day this week, right? Because we start out with the CPI data tomorrow. So CPI Tuesday morning, 8:30. Wednesday, we got PPI at 8:30 a.m. We got the Fed at 2 p.m. on Wednesday. We got Powell at 2:30 p.m. Then Thursday, we have initial jobless claims. And I think that's kind of the biggest thing. Yeah, we had jobless claims at 8:30 a.m. And then Friday at 10 a.m. we have consumer sentiment. So we've got, stuff all over the docket this week in terms of data. So a data packed week right after, a big week. It's just set up. It's literally set up to just yank that money right back out from under you. Top news, put it on plastic. A mountain of credit card debt is piling up as Americans turn to plastic to counter their dwindling purchasing power. According to the Federal Reserve Bank of New York, consumers now owe a record $988 billion on their cards, up 17% from a year earlier, or about $5,700 per person. Sheesh. While the steadily rising figure took a break during the pandemic years, the number is causing renewed nervousness as it flirts with the fast approaching $1 trillion milestone. Now, driving the spike, high inflation is pushing more consumers to put non discretionary spending on cards, while others may be having a harder time paring back their lifestyles despite the price pressures. In other words, controlling themselves. Interest rates are compounding the issue, with the average annual percentage rate now over 20%, making it a really costly debt for consumers. It's also higher than at any point since the Fed started tracking card APRs in 1994, contributing to the overall US household debt that topped 17 trillion in Q1. The first few years of the 2020s have seen a number of acute economic, financial, and geopolitical disruptions on a worldwide scale, and it will take time for the ultimate consequences of these shocks to be fully felt. PIMCO writes in a new article called The Aftershock Economy. Seeking Alpha analyst Wolf Richter also discusses the current landscape, but says that, quote, despite Fed tightening and bank collapses, it's still an astoundingly loose financial situation. Looking at individual stocks, investors can discover the latest Seeking Alpha analysis on credit card giants such as Visa, MasterCard, American Express, and Discover. Now, what's next? While economists have been predicting a recession for over a year, it has not yet appeared. Debatable, right? We were literally in one last year when we had 2 consecutive negative quarters of GDP. Um, some are more concerned about squeezed budgets as the Fed has not yet abandoned its hiking cycle, but is set to take more of a skip this week and are closely watching carrying balances, delinquency rates, and wage comparisons to determine the direction of the economy. Others see things settling down, with companies foregoing further price increases or even cutting prices as consumer sales cool off. That would help tame inflation and rising bills, as well as support seen from continued resilience in the labor market. So let's see here. Oh, they're just taking a survey at Seeking Alpha. Rising credit card debt is just one of the factors in sizing up economic growth. But is the U.S. still headed for a recession in 2023? People say yes. Some people are saying no. Overall, increasing credit card debt is something I've been talking about since the beginning of the year, right? If you guys have been here and you've heard me mention that, there are 5 in the chat, something I've mentioned more than a few times. Is that going to be something that single-handedly takes the economy? Could be, right? Only time will tell. Of course, having debt isn't necessarily a bad thing. You can have what is it, like business credit and business debt where you're kind of investing in things. A lot of people in real estate, right, using business credit. And it's not all a bad thing having debt. Like, not all debt is bad debt. But when you can't scale back your lifestyle and you're throwing it on the credit card instead of paying for it outright, that's when things get a little bit dicey. So overall, this could definitely be something that contributes to that. If we see recession at the end of this year, right, in the second half of this year, $1 trillion. I mean, that's a staggering number. But a lot of these banks do have tons of cash reserves, right? They are kind of ready for this to happen. The big banks are. The small banks can still struggle. But the major banks, your Goldmans, all them, they came into this year with huge cash reserves, knowing basically the people that they were dealing with. And that's really what you got to do is, again, control what you can control. I would never put my fate into Americans doing what they need to do to be fiscally responsible. Never, right? And these banks, the big ones, right, the smart ones, didn't do that either. They said, hey, we're storing up these cash reserves because you guys don't know what to do with your money. And in case you stop paying your credit cards, we need to have this money, to back us up. Overall, banks were something that did look, kind of intriguing this week. So we'll see. Goldman Sachs got a nice hourly bull flag there, breakout at 337.84. So Goldman Sachs, something to keep an eye on. As we go into today, go ahead and mark that level off. right? You always want to have thinkorswim up. Like I always have thinkorswim up, whatever I'm doing. Create alert withdrawing, boom, boom. Set my alert right now. Awesome. But yeah, overall, banks, something that we've been watching, right? I talked about banks a few weeks ago as well, and they've pushed since then. I talked about a number of them being at, important support spots on the weekly, especially. And Goldman Sachs looking good, pushing. Goldman Sachs, put in a hammer candle 2 weeks ago, and it pushed since then, right? And they've got, a nice potential weekly cup and handle on Goldman Sachs. So keep an eye out there on Goldman. Their ticker is GS. Broke that daily downtrend, starting to push here. So keep an eye on GS, right? Could make a nice little run. And there are a number of different bank stocks, right? Goldman Sachs, which is GS. You got Citigroup, whose ticker is C. Bank of America, whose ticker is BAC. We've made a number of trades on Bank of America. They have nice, cheaply priced contracts. So literally everybody and their mama can be in on Bank of America. But Bank of America pushing as well. Daily bull flag there. You can look to see kind of if they go to push that hourly high, not the 30.95. That was a blip, but break that previous hourly high. So overall, bank stocks are looking interesting heading into this week. That was something I wanted to mention. Financial, right on schedule. UBS has completed its $3.25 billion deal to buy troubled rival Credit Suisse, whose ticker is CS. About 2 months after the deal was brokered by the Swiss government to avoid the smaller bank's bankruptcy. UBS is also reportedly imposing strict curbs on Credit Suisse bankers to address risks, including banning new clients from high-risk countries and the launch of new products without UBS's approval. Seeking Alpha analyst Anna Sokodilu believes UBS will face more challenges ahead, even though the deal looks like a bargain. Quote, UBS still can't fully estimate the cost of impaired assets, capital outflows, and other resulting losses. Retaining staff will be an issue, whilst more legal proceedings are likely ahead. So just kind of more news and updates regarding that whole bank crash situation. There were a number of different banks that plummeted. Credit Suisse was one of them. UBS bought them up. So this is kind of like an update on what was going on in the financial sector in regard to Credit Suisse being gobbled up by UBS. COVID side effects. BioNTech, ticker BNTX, is said to be facing hundreds of lawsuits seeking compensation over alleged long-term side effects of its COVID-19 vaccine, which was developed in conjunction with Pfizer, ticker PFE. The first hearing scheduled today involves a German medical worker who is seeking damages for symptoms including heart arrhythmia and brain fog that she claims were caused by getting the vaccine. Quote, the positive benefit risk profile of Comirnaty, I guess that was the vaccine, remains positive, and the safety profile has been well characterized. BioNTech responded in a statement noting that 1.5 billion people had received the shot across the globe. Bulk orders for COVID vaccines in the EU also contain certain legal liability waivers, which could put EU governments on the hook for some of the costs. This I feel like is pretty natural, right? We don't typically trade Pfizer very often or any of these biotech tickers because news can come out and whipsaw them up and yank them down, et cetera, et cetera. But important to know, important to take note of. Let's see what Pfizer is even looking like. Trying to find some type of base here, some type of support on the weekly after a nice, stiff, and consistent downtrend. But yeah, Pfizer, Moderna don't really peak on any of those too often. They kind of had their heyday. They came and went. In terms of biotech companies or anything like that, it's Eli Lilly through and through. They're the most profitable. They've got their weight loss drug that they're dropping that there was an absolute craze over. So, Eli Lilly is definitely, if you want to be involved in any of the biotechs, the one that you want to be involved in. Let's see here. Tech, generative AI. So as generative AI continues to grab headlines, Needham highlights some underappreciated stock plays aside from bellwether names such as NVIDIA and Microsoft. The firm sees generative AI upside for consumer tech players through new revenue streams and pricing power, as well as market share gains for early adopters. Cost savings from automation efficiencies through AI are expected to take off in the next few years for the companies that get it right. Sleeper stock picks include Compass, ticker COMP, Redfin, ticker RDFN, Shutterstock, ticker SSTK, and nearly a dozen others. Again, this is an article that is written by someone. Do not take this as me saying that those are AI recommendations, right? Redfin also struggled because they went out and bid up prices against themselves, buying up a bunch of real estate, and it caused them um, to basically screw themselves, for lack of a better term, right? Redfin had its AI program going out and essentially trying to drive up the housing market. They were buying up all these different houses and bidding against themselves. So they were paying more for houses because they were bidding against themselves. And that got them in, a lot of trouble because it cost them a lot of money. So it's one of those things where like this isn't, me recommending those. This is just, hey, this could be opportunity. Make sure you check that out. That was GS right there, that little ding, then peaking above that hourly bull flag breakout. So again, GS something else to watch here. We'll see how it behaves at open. Make sure you're ready for those at open, right? Last week at open, talked about Meta. Talked about Meta immediately, right? Like, hey, looking at Meta at open. Um, this expiration, that means immediately, right? That's what you're looking at. So you don't need to wait for any specific although those were given, right? Make sure you use the knowledge that you have and then execute when it's time to execute. But with GS, we'll see, right? 337.84. That's the main level. We're testing it right now. We want to try and hold above that on the hourly. If we don't, not concerned with Goldman Sachs anymore. Now, terms of today's markets, pretty green across the board. In Asia, Japan, we're up 0.5%, Hong Kong up 0.1, China down 0.1, India up 0.2. In Europe, London, we're flat. Paris, we're up 0.7. Frankfurt, we're up 0.6. The Dow up 0.9%. S&P up 1.2%. NASDAQ up 1.7%. Not surprising given the fact that we closed above daily resistance, right? So if you swung SPY calls, which were called out, those will be green today, right? Crude oil down 2.2% to 68.63. Gold up 0.1. Bitcoin up 0.8% to 25,972. In terms of today's economic calendar, nothing big on it. So we'll finish up here with our rapid fire bullet point rundown. What else is happening? Air taxi interest heats up as FAA shines light on milestones. NASDAQ, ticker NDAQ, to buy Adenza in $10.5 billion cash and stock deal. Federal judge tosses 3M, ticker MMM, earplug units bankruptcy filing. Netflix sees spike in subscribers after password crackdown. So good for Netflix, right? All you guys that are out here capping, saying that you're canceling your Netflix subscription. I know you're not, right? You're just going to pay that extra money that you need in order to continue to stream because you're addicted to streaming. Let's be real here. Everybody's saying, oh, yeah, Netflix low. And whenever Netflix loses subscribers, people are like, I knew it. Ain't nobody paying for that extra. Did you cancel? No. Okay, then. Right. Jeffries weighs in on Microsoft Activision deal closing. JetBlue, ticker JBLU, American Airlines try to rework Northeast Alliance. Glencore eyes buying Tex coal business. Tex ticker TECK. U.S. Solar tallied best ever Q1 with usage seen doubling in 5 years. Solar, something else that I've been mentioning as of recent, right? Solar really, other than the resurgence in nuclear energy, solar is just absolutely crushing it. We've still got this weekly squeeze going on for TAN. It has been squeezing for legitimate months, right? Months on the weekly, just squeezing tighter, tighter, tighter. I think it's going to explode, and I think it's going to be to the upside. So again, this is just an ETF for solar stocks, but I'm watching it, and we are just squeezing so tight. I'd say within the next few weeks to month and a half, you're going to see TAN start to move, and it's at what, like 70.39 now, but we've been in this squeeze since, what is that, January of 2021. So this thing has been squeezing for 2 years, and it can absolutely explode when it finally does pick a direction. I lean that direction being to the upside just because, solar is absolutely crushing it. I don't know about you guys where you are, but solar farms going up nonstop in areas around Maryland. Also, it's just one of kind of some of the most some of the most technological breakthroughs in alternative energy have happened within the area of solar, right? So it's not just like, oh, are people using a lot of solar? It's that solar is constantly evolving and it's getting better in terms of how much energy it can capture and also hold. That's been huge, right? Wind energy, there's been a lot of different, there's still development going on, but not as fast as solar. None of them as fast as solar. And solar just continues to do well. So we just want to see that start to manifest on the charts. Keep an eye out for TAN, TAN, because when this baby explodes, it could absolutely rip after a squeeze. Imagine something was powering up for 2 years. Like it could just rip after that. So keep an eye out on TAN. I most definitely will. Might go ahead and set some alerts here for myself. And yeah, let's see that. Okay. Check if big check if big squeeze is firing. All right. So 10, keeping an eye on that bad boy. Now, what else? Alzheimer's disease market expected to reach 14 billion globally in 2030. Kind of sad to hear. Illumina, ticker ILMN, CEO Francis D'Souza quits in win for Carl Icahn. And then lobby group sues U.S. government over drug pricing program. So that'll wrap us up, put a bow on it, and take us out for Monday, June 12th, 2023, as we kick off this new week. Again, take all of what I said into account for this week. As we head into the week, we've got a lot of data every single morning. When we wake up, there will be data that can completely shift what the market is doing, right? We've got the Fed on Wednesday. We've got Powell on Wednesday. So we've got CPI data. We've got PPI data littered all throughout this week. Do not make this a week where you end up in the red after last week, which was such an amazing week, right? Don't give it all back. Be stingy, be stubborn with what you're getting into, recognize the risk and take profit early. Everyone gets used to that 100%, 150%, 300%, 1000%, right? And what do? They don't take 25 or 30 or 40, right? And that ends up going red. So make sure that you're playing light, you see profit, you take profit, and make it through this week, right? Other than that, everybody have a great rest of the day. You successfully became 1% better just by being here for this session. Take all that information to light, execute, remain patient, and you'll continue to level up. Have a great rest of the day, everybody. I'll see you back here tomorrow morning for our next pre-market prep session. Peace.